Good morning. Welcome to IG's early morning call. It's Thursday, the 10th of August. Let's take a look at the headlines as you wait what looks to be a stronger start across the European markets in today's session. It certainly seems like there's going to be a key event later on that we'll be pointing out for, which is going to be the CPI data out in the States. Now, this is going to be key. If we see a strong number, that could see an unwind of some of the early gains across the European markets. All this comes as oil pushes higher, higher and higher again. Yesterday we saw US crude near 9-month highs. Now this is the highest print that we've seen for 2023, with this big drawdown in US stockpiles, Brent just over 6-month highs. And late last night, we saw a mixed picture coming through from the entertainment giant Disney for the fiscal third quarter. Whilst earnings per share beat expectations, there's been big concerns about subscribers amongst the streaming part of the business. We'll tell you more in the next 15 minutes. Let's take a look at volatility down today, which indicates this appetite, I think, again, as we were saying yesterday, for risk assets across the markets. Got a rise here in the London markets. We're now very close to 7,600 level on the FTSE 100. Long-term picture, difficult to know whether we are going to see a continuation of the recent gains. I want to push that up to the recent highs you see there, 77.24. We're 75.91, so it's around about 130 odd points away from that level of resistance we're watching out for. I think at the short term, it looks like a positive sort of move in this market. We'll have to see how things develop over the next few days. As I said, really the 1:30 p.m. today key release in the US on US inflation is really going to steer the rest of the session today. Now, I want to show you this chart here, the DAX. In the last couple of days, we've seen a bounce of the 76.4% retracement, which has been held onto as a second day of gains at the moment, looking for a slightly stronger start on the German markets as well. And if we look at what's happening in France, very similar sort of picture, pushing up now to levels not seen in just over a week for the French CAC 40 at 7,400 is going to be the key level to watch, I think, psychologically, to pass that. If you pass that, potentially then on the way to the highs we saw back on the 31st of July at the 7,500 level. Let's look at what's happening in the Asia-Pacific markets out overnight. Whilst we're seeing gains on the Nikkei and the Australian ASX 200, you can see here more pressure being built up for the Hang Seng stock index. There's really some big question marks around what's happening in the Chinese economy, despite the fact there's been a lot of expectation the Chinese authorities are going to come back in and weigh in with some more stimulus. There's no evidence of that just yet. The Hang Seng stock index marked lower again on the session in today's trade. Wall Street closed last night, losses across the board. There's a nervousness amongst traders with the general sort of appetite waning for US stocks, as many believe that today's US inflation data could well be something which might well see a continued stickiness. We'll have some more on that and what to expect in just a few moments' time. I want to show you a couple of charts. Now, this is the NASDAQ. I'm going to show you the last few days or so. I put a Fibonacci on here just to show you how we stopped out. In fact, we did disappear below the 76.4% yesterday. But these little, this staircase, if you like, that we've seen on the NASDAQ, where we've seen a rise and a pullback, a rise and a pullback, and a rise and a pullback, you quite often get these fibs working out really neatly. I just want to show you what happened down here with this recovery that we saw in this part of the market here. We saw that bottom out of the 61.8%. So fib is a really good measuring tool to use in these, as I say, these staircases where you get highs and lows and pullbacks. But broadly speaking, so far as I'm concerned, this market continues to move up. And despite the fact we have this retracement at the moment, I think we are still looking potentially for more highs, so long as this 76.4% at 15,159 holds. We're currently trading at 15,182, so we are trading above that. We're looking at the moment, at least, for a small gain at the start of the day's trade when things do get underway. But I said that is really all down to that inflation data out at 1:30. The US inflation data is expected to be the big swing point of today's trade after June's surprisingly large drop in US inflation, which sparked widespread relief in the markets with this recent rally that we've seen on equities across the world. Investors now brace for more evidence that inflation and there's a reacceleration of price growth occurring, which may pressure the Fed into certainly keeping their interest rates as high as they are, if not pushing them up further, possibly in September. Let's take a look at the numbers that we're expecting. Economists suggesting that the annual headline inflation is up by 30 basis points to 3.3% in July, which would mark the first acceleration in the headline figure in 13 months. Now, a lot of large price spikes from 2022 have rolled off the annual comparisons, so reducing inflation, especially core inflation, further in the second half of 2023 may be slower going. Broadly, this is the Fed's perspective. It accounts for why they plan to maintain interest rates at relatively high levels into 2024. Now, core CPI estimates expected to be unchanged. Now, this strips out the volatile food and energy sectors. We're looking there for a 4% reading, according to economists surveyed by Reuters. Core inflation has remained stubbornly high and will be central to the Fed's discussions when it considers raising rates in September. I want to show you what's going on with the US dollar, because this is absolutely going to be key today in what's happening. This is the dollar basket, broadly speaking, holding on to recent gains up at 102.04. The way to trade this is by using it against the euro. Now, yesterday we heard more evidence to suggest that the ECB is going to keep its foot on the accelerator for interest rates. We're going to see further interest rate rises going into the back end of this year. Second day in a row of gains for the euro against the US dollar today, bouncing off this 76.4% retracement. If you're long on this, your stop goes below the 100-period moving average, just around about the 109 level if you're long on this. Now, one of the reasons why we've got inflation continuing to creep up is because of what's happening with crude oil. Now, crude oil prices today have hit new highs not seen since the 18th of November. So broadly speaking, we're at 9-month highs for US crude. And Brent is, broadly speaking, the same sort of price action you see here, peaking up there now at levels not seen since the 27th of January for crude. So we've got money going into oil, which means that it is stoking inflation, which I think is another reason to be cautious ahead of the numbers out later on today for July CPI in the States. Now, let's take a look at a number of companies worth watching across the European markets. I want to begin, first of all, in the betting sector and take a look at what's happening with Entain. Total net gaming revenue up 19%, excluding the US up 14%. Record level of online customers up 23% year on year, up demonstrating ongoing strategic focus of broadening the customer base, according to the release today. We got gains pretty much across the board. Now, this is what's been happening the last few days or so. We've seen 2 days of losses. 13.58 is where this stock will open this morning. If you're going to go long on this, which would appear to be the case for the trade, I'll certainly be looking to break this line of resistance up here. It's not too far away. It's at 14.16. We're opening at 13.58. We've got this rising line of support underneath where we are, which is something certainly worth looking at. So I think at the moment, at least, it looks like the trajectory is on the way up technically. And I think if you look at the numbers out this morning, so far as the fundamentals are concerned, things looking pretty good. If you're long on this, stock goes underneath this rising line of support. Staying on the charts, just want to run through some of the other companies worth looking at. Deliveroo, profitability ahead of expectations with adjusted EBITDA at £39 million in the first half. Adjusted EBITDA margin increasing 1.1%. from 0.2% in the second half of last year. So things are looking good. This stock, as of yesterday's close, was up almost 0.5% from the lows that we had back on the 28th of March on expectations that profitability will come through. And with this news this morning that it's ahead of expectations, I think it's looking good. Also, the total capital return to shareholders announced in 2023 so far is now at 300 million. Excuse me. The company has also proposed a new 250 million additional return of surplus capital to shareholders. So I think this all adds up potentially to an interesting start at the beginning of today's trade. If you're long on this at 123.1, stock goes below the 120 level with a view to taking it up and possibly surpassing recent highs we've seen up at 133. Let's take a look at another area of the market worth looking at for all the different sort of reasons. Savills, the property company. Now, this is an estate agent, high-end estate agent, but it's also a property management company, so it has a lot of staff costs. Group revenue is down 2.5% to just over £1 billion. Underlying profit before tax, 16.3 million. This is down from 59.2 million this time last year. Group profit before tax, just 6 million. That was 50 million last year. It has sustained its dividend, but the profit margins have dropped from 5.7% to 1.6%. The company says it's holding on to staff on expectations of a recovery in due course. It wants to keep its professional levels intact for its clients. It says that its costs continue to rise substantially. Now, this stock will open at 9.89. I don't like the look and shape of the of the numbers out this morning, and I'm wondering whether perhaps maybe we could well get some eating back into some of the gains that we've seen recently in this stock. That will open at 9.89. Let's take a look at what's happening in Germany. I want to begin first of all with the steelmaker ThyssenKrupp third quarter numbers. Profit up 7% at 83 million euros. It now targets the upper end of adjusted EBIT outlook for the full year, expecting high triple-digit million euro range against a mid to high triple-digit million range previously. So things looking good for ThyssenKrupp. That stock will open at 666. If you're long on this, stock goes underneath the 200-day moving average at around about the 650 level. So things looking good for ThyssenKrupp. I just want to quickly swing into what's happening with Deutsche Telekom. It's in the last couple of days disappeared below this line of support at 1872, but in fact yesterday managed to eke out a gain. It's raised its fully adjusted EBITDA outlook. Stock looking particularly good today, possibly for a further uplift in shares that'll start at 1880. So another company worth looking at. Let's take a look at what's happening as well with Siemens, the German industrial conglomerate, yesterday closing at 146 euros 04. The industrial business profit coming at 2.75 billion. Estimates have been for something closer to 3 billion. So I think that this is looking potentially a little weak at the start of today's trade. The shape of yesterday's candle, this sort of shooting star type thing. You normally get shooting stars at the top of a trend. So I'm wondering whether perhaps maybe possibly we might see this lower line here, the 200-day moving average at 143.22, tested by Siemens. Let's look at Munich Re as well. The world's largest reinsurance company said second quarter net profit fell a worse than expected 27%, hurt in part by losses in the disposal of fixed income securities, according to the release this morning, but said there was a better chance of beating its full year target. So a bit of a mixed look at what's happening there for Munich Re. Net profit in the quarter, 1.1 billion euros compared with 1.5 billion this time last year. Now that's less than the 1.25 billion we've been looking for. So I don't think necessarily we're going to see any fireworks on the upside. I want to show you this long-term chart here for Munich Re. You can see in the last couple of weeks we've hit levels on this chart not seen since 2001. So things having been improving recently with a hardening of insurance rates. So the stock will open at 34,445. As I said again, with outlook not looking as with the outlook looking good for the full year, but the numbers this morning coming through with a little bit of a disappointment in terms of the quarterly profit. I'm wondering whether perhaps maybe we could well see a little bit of a downside. I have to see how things open for Munich Re. Now, Disney posted mixed results after the closing bell on Wall Street last night for its fiscal third quarter numbers amid ongoing woes amongst its streaming subscribers. And this was backed up by a drop in subscribers today, massive restructuring costs and pulling content from its platforms. Adjusted earnings per share, $1.03 per share. We've been looking for 95 cents expected. So that was a good result in terms of the underlying earnings figures. Revenue, 22.3 billion, just below forecast at 22.5 billion, according to Refinitiv. Disney Plus streaming subscriptions, 146.1 million. This was 160 million last December. We were looking at 151 million that had been expected. So that's worse than expected. The majority of subscriber losses coming from Disney Plus Hotstar, where the company saw a 24% drop in users after it lost out on the rights to its to the Indian Premier League cricket, which is a big problem for the streaming business. One bright spot was that the company revealed its flagship sports network, ESPN, has struck a $2 billion deal with Penn Entertainment to launch ESPN Bet, a branded sports book. Also, Disney said it would resume paying a dividend by the end of 2023. And it was a mixed movement yesterday in shares. Look at the daily chart here on the Disney share price. The big, wide, long wicks on this candle here. I can show you actually what happened on an hourly basis. And you can quite clearly see when we saw the earnings coming out. First of all, there was this rise, pullback, because there was a problem with streaming. The rise was on news that earnings per share beat. Pullback coming in the concerns about streaming. Then came the really big news about the ESPN news with this sports bet, taking it all the way up then to levels not seen since Friday, June the 16th, just a few weeks ago, and then came the pullback. So the stock actually ended up 1% when all was said and done. But that was the journey it took late last night with this move up and move down on the daily chart that you can see. So looking to open at 9 o'clock this morning after the news last night saw shares up 1%. Now, let's just quickly move on to what's happening with just one other area of the market. We've already covered oil. I want to take a look at what's been going on with gold, because gold is coming down to a very interesting level of support. I've been following up on this recently, and I was talking about this going into the summer months. This is going into June. We were talking about this line of support at, what was that? It's at 1911. 61.8% retracement, and I think that is the number to break. I'm concerned that this is going to break this. And it could well then end up having a price target at 1870. Now, what would move this? Well, I think if we saw a very strong print on the US inflation number today and we saw money going into the dollar, I think that would mean that we'd see a candle close below the 1911. Then I'd be short all the way down to 1870. Just one other area I want to talk about is what's going on with copper. This is the only one of these base metals I'm going to show you. This head and shoulders pattern here. Second day in a row of gains now. Yesterday we did see gains and a pullback, and we have been trading below this neckline. If we do get a substantial move below the neckline, the next line to watch out for then is the drop down here with the projection all the way down to close on 8,000. At the moment, I'm not sure which way copper's going to go, but I'm just keeping an eye on what's happening with the copper price chart. That's it. About 15 minutes to go before the start of today's European session. Still looking for gains across the board here in the London markets. A lot of earnings out across the European session today, which could help give us a little bit of an uplift at the start of today's trade. Certainly here in the UK, watching out for Savills and Entain. Back at 10:30 with Charting the Markets.